going, guys? Rico here from Forever and Profit. This video is an introductory video for my section. What I'm going to be covering basically is trend lines, and just learning how to do basic trend lines. It's nothing too complicated, but if you're new to trading, they're going to help you a lot, especially seeing where the trend's struggling, where the trend might bounce, actually, stuff like that. So let's hop right into it. So right here, okay, what you're going to do is when you do your trend lines, make sure to do them on the H4 chart and the H1 chart. Those are the best charts to do them. What you can also do is switch your chart to a bar chart if you're having trouble. So let's say I switch it to a bar chart, I would connect my trend line right here. So let's connect the trend line. Let's make a trend line. So right here, okay, you may ask, why am I starting the trend line from here? Well, we came from a downtrend, as you can see here on the H4, bounced off the average here, started dropping, and it bottomed out right here. It made like a double bottom right here, and we got, I'm not going to go too into it, but we got divergence here on the TDI. So really what we're just focusing on is the trend line. So I'm starting here because this was the end of that big downtrend. So right here we got to rally back up. So I'm going to draw my trend line from this wick, and I'm going to try to connect it to at least 3 points. So we have one, that's 2 right there. And draw my trend line. Let me extend it out so you can see it. So as you can see here, I drew it from this wick. We got another tap right here. So this is the angle I'm going to use right here. It doesn't have to be a setup like this. It can just be one wick and then one wick and then one wick. What you want to try to do is get at least 3 taps on it. So that becomes a valid trend line. So right here, as you can see, although it wicked it right here, it made a reversal pattern. So right here, once it made that reversal pattern, I would probably draw my trend line right here. And as you notice here, as it rallied up, it hit the moving average, it came back, bounced off the trend line. So right here, we would know that we're still in an uptrend. Right here, it topped off at the 400 moving average. That's what that red line is right there. That's the 400 EMA. So I'm going to draw another trend line, but this trend line is going to be more like a channel. So I would draw from this wick right here. I think I had a better one. Let's see. Oh, I'm going to draw from this right here. These are channels. This is another trend line, but I'm not really liking because it's not connected. It's not hitting it too much. So let's see. Try to touch that wick. I mean, you can consider that a trend line. You got 1, 2, and it kind of struggled right here, and then it just tapped it one more time and then dropped. But right now I'll find a better area. So that's more like a channel. What we're trying to focus on here is, okay, so on this uptrend, as you can see, it did 3 taps. Right here it topped off, and then we got a reversal pattern right here. It broke through this trend line, came back, retested it, and then it kept falling. So that means that trend line is now invalid. So we would probably delete it, and then I would start a trend line again. So from the top, from the highest point, and try to connect some wicks. I think this trend line is going to be a little awkward because it's angled off. Like, that's too much. So what I would do is, okay, I'm going to find my next low point. This is the start of the downtrend, right? So I would put my, at the next rally back up, I would put it right there, and I would try to connect it to at least 2 to 3 points. So we got 2 taps right there, and then a third tap, it failed. So there you go, you see 1, 2, 3. Well, you can say this is a little tap right here. So 1, 2, 3. That's so you can draw your trend line right there. It came up to it, failed to take it out, failed to close above it, and then rejected it, and it dropped more. And as you can see right here, it broke it. So then now what I would do is I would start my trend line going back up. So right here to the low, connect it to a wick or the body. I'm going to connect it like that. See, I have a buy right here, and the reason, I'll go into that in another video, probably a support. So as you can see right here, this is the lowest point right, from this downtrend. So we came from an uptrend back to a downtrend. We had our trend line right here that it got rejected right here, right? 1, 2, 3 taps, and then the fourth time it got rejected. Dropped heavy, broke below this low, came back up, rallied back up. So I would draw my trend line again, big wick. I draw my trend line here, connected to this point. And even though there's no 3 taps yet, this is still a valid trend line unless it gets broken. So what I would expect right now is a rally up, small retracement, possibly hit the trend line later on. And as long as it doesn't break, as long as it holds, this will be a valid trend line, if that makes sense. Okay, so let's go back and do some more. This is just kind of introductory. I mean, I'm sure you guys know the basics of trend lines. If you're new, these are going to help you a lot to try to figure out, okay, what kind of trend am I in? Got a triple bottom right here. Not a really good trend line. If I drew it from here, it would be kind of a sloppy. If I drew it from here to here, it's only 2 taps, and then the third broke. So try to find a better trend line. That's all it's going to give me. Switch to another pair. So I would go on my H4 chart or my H1 chart. Okay, right here. This is a nice downtrend on UJ, so I'm going to draw my trend line. See, right here, drawing it down, it would be kind of awkward. So what I'm going to do is I'm going to pick this wick right here. This is the start of the downtrend. It should be drawing it from here. Sorry about that. Take off the tracers. Should be drawing it from here. However, because of that consolidation for the drop, the trend line is not too pretty. So what I would do is I would angle it off and find another high point right here before the drop. So right here we get 3 taps, as you can see. I'm going to try to connect it to the that third point right here. So you can see we're on a downtrend. Actually, I see another place you can connect it to right here. See, so we get, this is the start of the trend line, right? We're just, since this is a downtrend, that's why we're drawing this trend line, obviously, right? So we get, that's the start, second tap, third tap right here. That's when you see that third tap and it fails with a reversal pattern on the H4, you can start drawing your trend line, right? And then you extend it, and then you would see what would happen. Okay, the market is dropping, consolidate. You get a false reversal pattern right here. As you can see right here, there's a false reversal pattern going up. It hits the trend line, and look what we get. We get a nice reversal pattern down to the downside. Boom, you could have taken an entry in there, a sell off that trend line break. Trend line rejection. So it drops down. It drops down, and then it just consolidates and slowly starts to rise. So you could have taken a sell right there. Why? Because you already got 3 hits. It's a valid trend line. It comes up. The fourth hit got rejected. So you would probably take a sell in there. If that makes sense. Okay, so right here, I see a valid uptrend line. So look, this is the lowest point, right? Kind of bottomed out right here. You just kept wicking it. So I'm going to draw it from here. Right here is the second tap. I'll draw it all the way up so you can see what I'm saying. So look, I would draw the trend line when I would see, if I start seeing a slope up, like an uptrend, I would draw a trend line and make sure at least there's 2 to 3 hits. The better ones is 3 hits, obviously, right? So 1, 2, 3 right here, rejected it. It kept climbing up, consolidate. This consolidation is the reason it broke through a little bit, but look at this, rallied back up. Topped out at the 800 moving average, that dotted line is the 800 moving average, and then that's when it started its fall. But notice right here, when it broke this trend line, that's when you know you're heading into probably a downtrend. It's a little late to get in, but you can get out, you can get in on a retest. So right here, when it retested this moving average, it's under it, right? It hit the 200, and then it came back, hit the 400, drop. So you could have gotten in on this little reversal pattern if you know you're in a heavy downtrend right here. Right, so right there you would sell. Boom. And then you draw your trend line again. As long as this trend line does not break, you can hold your sell. That's simple. Really not that simple, guys. I mean, not that complicated. Trading is pretty simple. Just gotta learn the basics and then move on from it. So right here, I see an uptrend line. Let's see if we can connect the points correctly. So we have a low point right here. Draw it upwards. Okay, so that wick right there, I'm going to try to connect it to that big wick. And if you want to know, like, you should watch Ryan's videos and Quillen's videos, and they go more into depth. I'll be going more into depth, but this is just the introductory, basically the trend line. So look, this is my lowest point. I got a wick right here. I'm gonna connect it to that, and then notice right here, it kind of just struggled right here, and then it finally broke upwards. And then look, there's our third tap right there. You got tap right here, tap right here. So it's already 4 taps. Valid trend line up. What I would do is I would extend it. So let me put Ray. If you put Ray, it extends it. So notice when it came back to it, it retested it, but then it shot back up. Right here, it broke through. Once it broke through this uptrend line, just kind of consolidate. You know, you could be heading into a downtrend. So you would probably draw another trend line again. So this is just basic trend lines, guys. This is nothing hard. Notice right here, if I'm going to start from this peak, kind of drop, consolidate, come up, get rejected twice. So right there, that's our 3 hits. We will leave the trend line. When it came up a 4th time, zoom back. Okay, notice right here. So I drew my trend line from this peak, right? I'm connecting it to these 2 points that failed to take it out, right? Failed to break that high. Notice it dropped down, it came back to retest it. What do you see right there? You see a perfect reversal pattern on the 4-hour chart. That's very powerful. The higher the time frame, and if you see a reversal pattern on a higher time frame, that's very, very powerful. You know something's up. So what you would do is probably wait for a small retrace and then put a sell in. As long as this high that you're trading off of does not break, your sell is still valid. So notice the trend line held. Even though it rallied back up in 4 hours, the next 4-hour candle engulfed it. Could have put another sell in there again. Boom, big drop. You probably would have gotten out when you saw right here, when it bottomed out right here and it made like a triple bottom. And then you see a nice hammer with wicks to the downside. You would have probably gotten out right there. Come up, retest it again. Notice this right here, look. Retest the same trend line. Reject it. Drop, wait for a small retrace, because look at that big drop, that was huge. So you wait for a small retest of this moving average. There's an 800 and a 400 right there, 200 and the 800, and then the 400. So you just wait for a small retest, you put a sell in there, because look at that big wick, you know it's going to drop, especially off a trend line right there. That's the 5th hit. So you put a sell right there and then hold it, and then look what you would have gotten. Huge drop. Okay, so look, we got a big wick right there. Let's draw a trend line off of it and see if it gets respected. Sorry about that, my mouse is tripping out. Notice right here, I'm going to draw from that big wick downwards, right, a 45-degree angle down. It gets respected right here, small wick above, right there, close the hammer. You could have taken another sell in there and just written it down. See, and then it hits it again, rejects it, and then we get consolidation, and that's why it breaks through. And now using the trend line as a support, boom, rally back up. You would have gotten out probably right here when it was bottoming out. When you see these big wicks towards the bottom, you can just draw your support line, right? This is for another video, but just showing you the basics of the trend line. When you see a big wick like this on the 4-hour chart, you can just draw a support right there, a support line, horizontal line. And notice it just keeps, it bounced off it 2 times, so you probably would have gotten out. Then just wicks it, boom, you get a nice little hammer reversal pattern kind of. That big bullish body right there, you would have gotten out for sure. And then you draw your trend line up again. Same thing, if it breaks it, you take a sell again. It's really that simple, guys. So that's my trendline video, just showing you the basics. 1 hour on H4 chart, so that's how you're gonna be drawing your trend lines. If you're having trouble, just go to the bar chart, and you'll be able to draw your trend lines from there as well. So That's it, guys. Hope you guys learned something. My next videos, I'll be going more into using the trend lines, basically taking orders off of them based on reversal patterns. So see you on the next video. Peace. Hey, how's it going, guys? Rico here again. In this video, basically what I'm going to be talking about is reversal patterns. You can find this in the Facebook group under the file section, or you can find it on the website under the download sections, I believe. The download section. So basically, all I really want you to worry about is study these highly reliable bearish reversal patterns and the bullish reversal patterns. Okay, only the highly reliable ones. The other ones do work, but in my experience, really what you want to be studying is these highly reliable ones. The other ones, like I said, they do work, but these are really the best ones you want to be trading. So all I do is I wait for one of these patterns to form on the 1 hour chart. Sometimes they'll form on the 30-minute chart, and I'll take it, but ideally I would wait for the hour chart candle to close. Right when the candle's about to close, with about 10 seconds left on the candle, and I see one of these highly reliable patterns, I pop my trade in, okay? And then I set my stop loss accordingly. And then once my trade goes into profit, probably around, I would say 30 pips, 35 pips, I move my stop loss to break even and I let it run. And that's how I've been making money. So basically I'm going to be going over the reversal patterns. Okay, so these are the best reversal patterns, okay? These are the ones you're going to be looking for, like I've been saying. The abandoned baby right here, the dark cloud cover, the evening doji star, and the evening star, right? Those are for sells. You scroll down. For bullish setups, you're going to be looking for the abandoned baby, the morning doji star, and the piercing line right here. So the piercing line, the abandoned baby, the morning doji star, 3 inside up. I mean, this one's okay, but I'd like to see more of the 3 outside up because this bullish body engulfed this previous candle. So all you really want to be doing is studying these highly reliable. If you see one of these on the hour chart and it's in the right section of the market, and then you compare it up with divergence or a supply and demand level or a bounce off a trend line, those are gold, okay? So these are the patterns you're going to want to be studying. There is a lot of patterns to study. However, these are the ones I really want you to focus on. The abandoned baby, the morning doji star, and a piercing line / engulfing, right? The piercing line, the body doesn't close above, so really the engulfing is the best one. The engulfing, morning doji star, abandoned baby, let me scroll all the way up. Abandoned baby, dark cloud cover, evening doji star, evening star. The dark cloud cover is basically the engulfing to the downside instead of to the upside. So these are the patterns I look for, guys. I don't complicate your trading. Just wait for the hour candle to close. If you really want to be a good trader, you need patience. And the best patience you can have is waiting for one of these patterns to form on the 1 hour chart and taking it. They also appear on the 4 hour chart. If they appear on the 4 hour chart, and then you have some confluence, like it's hitting a trend line or it's hitting a moving average or something like that, you can take that trade, okay? Make sure you set your stop loss accordingly. If you're taking a sell, you're going to put your stop loss a little bit above the high. If you're taking a buy, you're going to put your stop loss a little bit below the low. I say 13 to 23 pips is a good stop loss, depending on the setup. Because some setups, the entry is going to be you're going to need to use a bigger stop loss. And what do I mean by that is this dark cloud cover, this bearish candle will be huge, and it will close all the way down here, double the size of the previous bullish body. And your stop loss, you have to take the entry, right? Because you're taking it off patterns, the reliable patterns, but your stop loss is going to have to go way above. So I mean, you're taking more risk depending on the setup. That's what I mean by the pip. Like I can't tell you how much pip stop loss to use, but it should be above the high if you're taking a sell, and it should be below the low if you're taking a buy. Okay, that's basics. You know, I'm just running down basics right now. So okay, these are the patterns. Okay, now I'm going to show you on the charts. Okay, so I took a buy right here. Why did I take it? Double bottom. RSI showed a W, a double bottom forming. There was a highly reliable pattern outside the Asian session going into London. Remember, the timing is also very important, so I would check. Okay, the doji formed at 9 GMT. The bullish body formed at 10 GMT. Boom, I'm in. That easy. 10 to 19 GMT. Look for a reversal pattern on the 1 hour chart. You know, and just it's really that simple, guys. It's really that simple. Don't complicate trading too much. We're going to get more advanced in more videos, but that's the gist of it. Right here, you have another reversal pattern. Right here. But the thing is, this bearish body it was not a very big bearish body. What I like to see is the reversal pattern to be very distinct. And what I mean by distinct, I don't like those little, like, even though this was a reversal pattern, notice this bearish body was not that big. What I would love to see is this bearish body is it's very large, is what I mean. Like, that's a distinct pattern, okay? So right here we did get a, what is that, dark cloud cover? See this bullish body, this bearish candle completely engulfed it. It's probably double or triple the size of that bullish body, right? So that would have been a sell, but you would have looked and you would have seen that you're hitting a moving average, so you know you're probably going to consolidate or bounce a little bit off it, right? So what you would do, if you see it's right there near an average, you would probably wait for a small retracement, see what happens. I mean, you're in Asian session right here. You shouldn't be trading. You could trade Asian session, but only on Australian and JPY pairs, and you have to be very careful, okay? So I would wait until probably London before I took a sell right here, okay, right? So I would take a sell in there. On that, I would love to see the pattern more distinct, but it did have a wick to the top. It closed below the moving average, so that would have been a nice sell. Your exit would have been your pip count. I mean, you can shoot for 50 pips per trade. That's a good number. If you want to shoot for 25, you're more than welcome to. I like to shoot for at least 75 pips on my trade. If I don't, I'll move my stop loss to break even and I'll let it run and I'll try to get as much pips as I can. Okay, so that's one pattern. I see the same pattern right here, and that's why I took the buy. I got a little eager and I took the buy before the hour candle closed. I took it with, I think, maybe 2 minutes left, and the pullback happened. And what you want to do is, look, you're going to use your candle end time spread. When this next bar, when that's about to say 0-0, like to go on to the next candle, and then you see the reversal pattern close on the hour, that's when you're going to take the trade, okay? So do not take a trade until the candle closes. That's my best advice, because you can get trapped on a wick. You can get a bad entry. Like, as you can see here, I did not get a prime entry. The best prime entry would have been wait for the reversal pattern to close and then wait for a small pullback and then take the buy. That would have been the best thing, but I got impatient and I didn't get the entry I wanted. You see what I mean? So now my stop loss, even though I moved it to break even, my stop loss would have been a little bit larger, you know what I mean? So I'm taking a little bit more risk on my account, and that's not fun at all, you know what I mean? You want to minimize the risk. So that's why I'm telling you guys to wait for the hour candle to close. If you trade off the 4-hour chart, you're going to wait for the 4-hour candle to close, okay? So it's only logical, okay? So right here, we do have a reversal pattern. But because of this large bearish body, we can expect it to just, even though you got a reversal pattern right here, we can expect a small pullback. Right here, they gave us the pullback. You could have gone in. You would have waited for the reversal pattern. You can either get in on the reversal pattern or wait for a small pullback and then put the buy. And then you would have rode it up. Probably got like 50 pips out of that easily. See, if you got in on the reversal pattern right here, the long drop, yeah, you would have gotten in. You could have gotten 50 pips in about 2 hours. So that's pretty good. Let me scroll back. Right here, we got a reversal pattern. I want you to notice the timing on this. 11 GMT, perfectly. Look, 10 GMT, 11 GMT, reversal pattern. So don't complicate it. 10 through 11 GMT is when you're going to be looking for reversal patterns, and 16 through 17 GMT, you're going to look for reversal patterns on the 1-hour chart. So our timing, it can alter a little bit, but always, it's going to be 10 through 19 GMT. Okay, I want you to remember that time. It's above on the videos. Okay, so I'm just running down basics for the noobs. You know, don't get frustrated, but it's not that hard, guys. Just study your reversal pattern sheet Let me find another one. I think I see one right there. You scroll back, zoom in. Okay, I see a small reversal pattern right here. Could take a sell in there. We do get a reversal pattern right here at the close of New York session. I wouldn't have taken it though, because it might have just consolidated. And notice here it did a stop hunt and then drop, wick to the top and then drop. But you're in a supply and demand zone. The timing is very important. Let me scroll back. Right here, at the end of Asian session, you get a reversal pattern. That's a reversal pattern right there. You're taking a buy right there. Could have rolled it up to the average, 74 pips. Not bad at all. Minus the spread, you probably got 70 pips. So this is just basic video, guys. Like, I'm not gonna go too crazy into it, but everything's got to line up. If you see a reversal pattern near a trend line, like you see here, I drew a trend line from here. It broke out, and then it did a reversal pattern back above, closed above the trend line. So I would have taken a buy. That makes sense. Test the trend line again. I see a reversal pattern. What is this? A piercing line? Yeah, because it didn't close below. It didn't close above. Sorry, I gotta scroll back every time I zoom in. So yeah, that would have been a piercing line, not an engulfing, because the bullish body was smaller. So we'd have taken a buy in there, but I see we're in Asian session. I probably would not have traded it. I mean, it's a Australian JPY pair. It will move in Asian session, so you could have taken it, but another one right here. See that reversal pattern? Let me check what time it is. I can probably bet you it's 3 GMT. Yep, 3 to 4 GMT. If you're going to be trading Asian session, which I don't recommend, but if you are, use a Australian pair or a JPY pair. You're going to look for moves in 3 to 4 GMT, and we got it right here, 3 GMT, a doji, 4 GMT, bullish body, got a reversal pattern, boom, rise. Take your pips, get out. So, see another one right here, in London session. Another one right here, drop. So really, all you're going to be looking for is reversal patterns on the 1 hour chart. Confirm with RSI line, stochastics, whatever you like to use, whatever oscillator you use. If you use the ADX strategy with Quillen, confirm with that, maybe a crossing. Okay, so right here, we got a dark cloud cover. It engulfed the previous candle. We took in a sell in there. We're in the London session. It bounced off an average. That's the 200 on the hour chart, a very strong average. So we would have taken a sell in there. You can scroll back to your charts and you'll find them. Zoom out. Okay, so, well, you're saying, okay, this is basics. I already know about this, Rico. Okay, I know that. I'm just running it down for the newbies. Try to understand. Let's say you go to the 4 hour chart. The reversal patterns are going to be way more accurate. Right here, we got a triple top. Right now, I'll go into the formations, actually, of what you're going to be looking for. The ideal formations would be, let me see if I can do it on here. So you would be looking for double bottoms. Look for this structure, and you would look for a reversal pattern on the second leg of the double bottom. Okay, so it would be the same thing to the upside. If you see a double top, ideally you would look for a reversal pattern on the second leg of the double top. Same thing with triple tops. You would look for a reversal pattern on either the second leg or the third leg. Okay, so let's say you get a triple top. Ideally, you would look for a reversal pattern on this third leg right here. Okay, same thing with the triple bottom. You would look for a reversal pattern on the second or third hit. As long as that high does not break, let's say you're trading a triple top or a double bottom or whatever, as long as that high you traded off of or that low you traded off of does not break, you're good to go. Okay, so don't be scared if the market starts coming back to your order. As long as you have your stop loss in place, you should be fine. Alright, so don't let the market scare you. So let's say you have a triple bottom. you would look for a reversal pattern, most likely on the second or third leg, okay? And if you have a head and shoulders, same thing. The head and shoulders is just a variation of a triple bottom, triple top, right? So depending on how this structure lays out, you would look for a reversal pattern on one of these, on the second leg or third leg, okay? If you see these formations on a higher time frame and then you see a reversal pattern, and then that high does not break or the low does not break, you can take the trade, okay? As long as you confirm with a reversal pattern, okay? So I really want to emphasize you confirm with the reversal pattern always. All right? I don't want you taking a trade off a doji if you're not experienced, okay? If you're not making money, don't be guessing, okay? Make sure to confirm with the reversal pattern close, do a low volume that your account can handle, and then let it ride. That's how you're gonna flip your accounts quick, okay? Don't trip out. Don't trip out because you're getting in too early. I think that's the big problem that most people have, is they get in too early. They don't let the trend, they don't let the reversal form. They get in on a doji or something, and then it breaks the low, and you gotta buy in, and you're like, damn it, I got in too early. So that's you gotta combine everything that we've been teaching you: trend lines, supply and demand zones, time trading, confirm with the reversal pattern close. In the right section of the market. You see, like right here, how I topped off. So let me draw a resistance line right here at this wick. Notice it never closed above that resistance line. Came back up, hovered right below it, showed you a reversal pattern, and then you got a big wick right here. This is a small reversal pattern, not as clean as this one, right? But that candle still engulfed this previous structure. Drop. Hit the moving averages, consolidate. Get another reversal pattern, London session, drop. Okay, if you want to know what my settings are for the session boxes, let me show you them. Okay, so my Asian is 0 through 8 GMT, and then I changed the New York session box. I made it into a London session box. So all you do is you type in beginning 11 GMT, ending 15 GMT. So as soon as I see that London box close, like turn off, I already know that New York is coming into play, okay? So you're gonna look for moves in the London session. In between the Asian box and the London box, you're gonna look for a reversal pattern on the 1 hour chart or 4 hour chart, and then same thing if you see something in the London box, you see a reversal pattern, you take it. That's simple, guys. All right, see you on the next video. Peace. Alright guys, moving on to MT4 with Australian JPY. Another reason why I'm saying it's going to be a bullish move is because it looks like we have like a semi head and shoulders formation. Alright, let's draw it out. Right here, you see how, like, look, the first 8 hour support and resistance, that's the indicator, right? You just put two horizontal lines, the Sunday Asian high and Asian low. But look, I thought this was the head and shoulders, but what ended up happening is it made another one. Low, slightly broke the low. See this previous low? Slightly broke the low, but we see a reversal pattern on the 1 hour chart. So what did this tell me? Well, this low, it was tested, but it got out of there real quick. The market got out of there real quick. So this might be a head and shoulders formation. And with that daily candle showing us a reversal pattern, the chances that this is a bullish market now is very high. So all I'm going to do now is wait for a reversal pattern to the upside, probably in the middle, either the beginning. Look, for this strategy, it's just going more off of Ryan's GMT times and all that, right, on the 1 hour chart. Basically, the strategy is, if my bias is up, all I'm going to be looking for is reversal patterns, 11 to 12 GMT. Actually, it's 10 through 12 GMT. But obviously 11 GMT, you're going to be in front of the platform, so you'll be able to tell. So either I'm going to get some type of reversal pattern here in the beginning of London, or it's going to be towards the end of London going into New York. Okay, so it would be probably like 17 GMT. So let's see. Right here the move was at 16 GMT. See that? So 16 through 17 GMT, New York move. And of course this is like our time trading strategies, like everyone already knows this, but I'm just trying to show you that on the 1 hour chart it's real easy. All you look for is a reversal pattern with your bias, right? Our bias was down right here, so we're gonna look for shorting opportunities. We see a reversal pattern, 16 GMT to 17 GMT. I see it at 16 GMT. Same thing with a London, like right here. Let me zoom in on that so you can really see it. That's a reversal pattern right here. Made a double bottom. On what time did the reversal pattern fully form? 12 GMT. Right, so 11 GMT the doji, 12 GMT. See, so it's always those times. That's the times you're going to be looking for moves. See, what time was this one move? 17 GMT, 18 GMT. See, the end of London going into New York. So going into London, you're gonna look for moves. Going into New York, you're gonna look for moves. It's gonna happen one of those times, pretty much. So if it just consolidates, you can expect it to go into the next session, right? So if it doesn't happen right away in London, within the first, I say 2-3 hours of London session, 11 GMT, you just wait a little bit. If it doesn't happen right away, it's gonna happen in New York. So, you know, I wasted a lot of time just like watching charts when the moves are pretty much, you know, near the same times every time. See right here, 17 GMT, 18 GMT rise. See, that was Friday going into the Sunday, Monday. But basically, these first 8-hour support and resistance bands, what's nice about them is you can see the formation. You see the head and shoulders. We see a double bottom right here, up, rise. You know. So head and shoulders, daily reversal pattern. The weekly's gonna close possibly. I don't know why my weekly's glitched, but the daily's gonna already close the reversal pattern, so our bias is up. 1 hour chart, semi head and shoulders, right? Kind of ugly, but it's there. We got a double bottom. See any divergence? This was going, this double bottom. This was rising. It's not really divergence, but price is rising, and you know, we get kind of like a double bottom here on the RSI line. The RSI is 5, that's why it's probably looking like that. Actually, let me see what it looks like on, I think that's actually a 7. It's a little too fast for me. I'm gonna put it on 14. Yeah, and our RSI line really from the low of the week, it's been rising. So that's why you're going to be looking for reversal patterns to the upside. So on this trend, I would not sell. I'm looking for buys all the way up. If you guys watched the previous video, you'll know why with the markup I did on TradingView. So pretty much all I'm going to be looking for is double bottoms, stuff like that. I'm just going to be looking for reversal patterns to the upside at those times I stated. 10 through 12 GMT and 16 through 18 GMT will be the New York move. So it's either going to be one of those, it's going to be that window is when I'm going to look for a reversal pattern on the 1 hour chart. And, you know, that's it pretty much. It's not that hard. You know, pretty much simplified everything for you. And just look for structures. Like if I want to go into structure real quick, double bottom right here. Head and shoulders, mini one, right? Because it got broken, but it's still like a double bottom really. But you see the reversal patterns. See the reversal patterns. Always just train your eyes to see these reversal patterns. Because if you catch it, at those times I stated on the 1 hour chart, it's pretty much, it's real easy. When the candles go above the averages, you're just going to use them as a support. So if this pulls back tonight, it's probably going to use the average as a support and then reversal pattern off of it or something. So that's why I'm looking for longs now. The Asian moves, it's 3 to 4 GMT. Right here, 5 GMT, so 3 to 5 GMT. Really, but it's really 3 to 4 GMT, but you know, 3 to 5 GMT, 10 through 12 GMT. Like, actually, I'll write it down. So you guys can write it down. 3 to 5 GMT, 3 to 4 GMT. Just giving it an extra more time, you know, for the reversal pattern to actually form. 10 through 12 GMT. 16 through 18 GMT. New York move. So these times right here, make sure to write them down. You're just going to be looking for reversal patterns on the 1 hour chart. Alright? And you can take easy trades pretty much. Especially in a trending market. Like right here, there's a reversal pattern. So what time was this one? 10 GMT. The reversal pattern, 1 hour chart, boom, rise. Could have caught all that. See a double bottom right here. What time is this one? 18 GMT. Ooh, man, see those windows are very important. See this drop right here. So it's 2 GMT, 3 GMTs, and the drop started. So got the reversal pattern right before. You see those key times. This big move right here, I want to see. Yeah, New York session. 16 GMT, doji. 17 GMT. Bearish candle right there. And it just slowly dropped forever. Cut all that. See, for those windows of time are the most important when you're looking on the 1 hour chart. Try and look for those reversal pattern formations. Market structure formations, like double bottoms, triple bottoms, all that. Head and shoulders. That's how you got to make sense of the market. So you got to attack it day by day. If you're not going to be swinging off the daily chart and the weekly chart, you know, this is how you can look. You can be looking intraday, like 4 hour chart, 1 hour chart. You know, I would just say to stick to the 1 hour chart because it's so easy. You know what I mean? For the reversal patterns are really accurate. So you can just be writing, you know, easy pips, like easy 50 pips per trade. And that's it, guys, for this video. I've been just showing you Australian JPY. You know, I just write. It's pretty simple stuff that I'm showing you, but I'm telling you guys the simples. The simplest strategy is usually the best. All right, so you know, study this video, memorize it, write down those times. Actually, let me scroll back. See where I wrote them. Right there. You know, these windows into the market is when you're going to be looking for reversal patterns on the 1 hour chart. You know, and then try to get a bias, and then just wait for these times and look for a 1 hour chart reversal. You know, that's the strategy. It's pretty simple. You know what I mean? Broken down, and then add in trend lines and all this stuff. Like everything can line up perfectly. You got it. Take the trade. Hey, how's it going, guys? Rico here again. In this video, basically what I'm going to be talking about is a little bit divergence. And divergence is, right now I'll explain it. It's when you use an oscillator, such as an RSI line. I have my RSI line in this video set to 21. Sometimes I switch it. I'll use Ryan setting 5, or I'll use a 7. On my mobile, I'll use a 7. Right here, okay, so my RSI is set to 21. I'm on the 1 hour chart, okay, so I'm on Australian USD. Basically, what I do, this is like a little, I don't know, it's a little secret. I know people know about this, but let's say if I see a double bottom forming, or a double top, or a triple top, or a triple bottom, like on a major, all I'll do, if I don't see a clean reversal pattern, I'll just switch to a cross. So as you see here, look, I'm on Australian. Like, let me switch back. This is Australian. It made a double bottom. In our RSI line, we do get a, it's rising, right, on the second leg. It's a little bit, zoom out. Okay, right here. Put a box around what we're going to be looking at. That's what we're looking at right now, right? It made a low at the end of, going into New York session. It rose, but it didn't rise just crazy. So we hit Asian session, came back and retested that low. So I'm going to look down to my RSI. We are almost at the oversold, so I would be looking for buys. RSI is slightly rising, and the low gets repeated. So let me draw it. So look, my low got retested. See, this is the low. I'm going to draw it from the wick, right? I drew this horizontal line. I'll look for a retest going into London. Okay, that's how easy it is. Look, you see a low or a high, look for a retest going into London. Like, let's say this is at the end of New York. I'm gonna look for a retest going into London. So after Asian session, if Asian session doesn't rise it like right away, I'm gonna look for a retest. Okay, so that's why you always wait until 10 GMT minimum if you're gonna trade London, right? So look, I noticed when I was trading this, I was on Australian, obviously, right? I was trading Australian, but I noticed, like, even though we do get a reversal pattern right here, the candles were going erratic. Like, they were going up and down like crazy. So all I did was, okay, Australian doesn't look very good. Let me switch to Australian JPY. It has a similar structure, a double bottom. The low did get retested, but it closed a doji above it. So this low is still valid. I'm looking for buys. I'm going to look towards my RSI. It looks like it's making a double bottom. Actually, it looked like it made a double bottom. So it made a W right here. Came back down, retested low, made another W. Rise. The reversal pattern on the retest of the low. This is our support. Came back, retested it. 1 hour chart, get a reversal pattern, rise. So that's why I took that entry, you know. That's why I took that entry. You know, you could have taken 100 something pips from it. I only took like 50 something because this pullback was tripping me out because Australian was pulling back hard. You see that pullback on Australian? That's why I tripped out when I was on AJ. And I took early. I should have waited, but you know, it's just part of the deal, part of the learning experience, right? So let's say you see a low, a low come, like this is the 800 moving average. Also the 400 is there, so that's why it kind of just bounced off, came back and retested it. It didn't close below the moving average, the 800 or the 400, and it also didn't close below our support, which is this wick right here. That would have been our support, right? So going into London session, I would look for buys, confirm with my RSI. So the next day, what do we see? We go. You can use a 30-minute or the 1 hour chart to be looking for this stuff, the divergence and all that. So I see price made a lower low right here. Oh, my bad, I got the wrong object. Trendline. So as we can see here, price made a lower low, but on the RSI, it's starting to flatten out. Even though the RSI line is slightly dropping, it came right back with that reversal pattern right here. So even though like, look, I was gonna take Australian like on Friday, like when I saw this reversal pattern, I was gonna take it, but this thing took off so quick. Like, I just went to AJ, and I was more looking at AJ. So when I went, I just keep switching back and forth between Australian, and I saw this reversal pattern. It wasn't as clean as the AJ one. That's why I took the AJ one, because look, AJ made a cleaner reversal pattern, but AJ was real slow to rise because the JPY was dropping. So even though Australian was rising, JPY was dropping, USD JPY, right? It was dropping, and that's why it took forever for AJ to rise. But it looks good. The reversal pattern's good. It looks like we're on first level rise. So we got divergence on AJ right here. What divergence is price makes a lower low, but our RSI is rising on the second leg. So price made a lower low on our RSI line. We're already near the oversold area because remember 32, 50 is a midline, 68 is the overbought, 32 is the oversold. I'm using TDI. All I did was take off the other indicators attached to it, and I just left the RSI line. You can just use a normal RSI. Mine set to 21, like I said in the beginning of the video. So price made a lower low. Our RSI is rising. So what does that tell us? Well, that the market keeps going down there, but the wicks, since it's throwing wicks, that's why RSI is rising. Because remember, RSI only measures the close of the candles, so that's why we see this divergence. A semi-divergence on Australian, I mean, it made a super lower low. Like it dropped a lot more than this previous low right in Asian session towards the end of London, and the RSI, well, it should have dropped more, but since the closes were all the way up here, that's why I call it a semi-divergence. It's not really divergence, but it should have been dropped more lower, obviously, right? But since the wicks were so large, that's why it closed like that. That's why I didn't drop that much. So we see a double bottom formation on the RSI. Could have taken a buy right there on that reversal pattern. I did take the buy, but I took it on AJ instead of this, which I should have taken this one, because look at that. But the reversal pattern wasn't as clean to me at that time, you know what I mean? Looking back now at it, I could have just taken half a position here and then half a position on AJ, and that would have been the best bet. But, you know, you learn. Live and learn. So, right here I see more divergence. Right here, price made a higher high. Make sure to match up this trend line. Match it up. See right here, price made a higher high, but as you notice here on the RSI line, it's falling, slightly falling. See it? See that double top formation on the RSI? So that's a clue. Also, this previous high is higher than these two peaks right here. So really we got a multi-session divergence here. So price is rising slowly, but since the wicks and then they close back below, RSI is showing a fall. That makes sense. So what would that tell us? Well, that would tell us that we're looking for a drop soon, because RSI is falling even though price is making a higher high. And all we would do is wait for the reversal pattern close right there, in between, after Asian session going into London. I would check my timing, make sure it lines up. 10 GMT, 11 GMT, sell right there. Also used the Asian high from the start of the week Sunday as a resistance point, and it didn't close above, so I would have taken a sell in there. Would have gone now, probably by Asian session, or probably when it hit the average right here, because it hit 800 moving average and a 400 moving average, so that I know that's going to be a strong support. So it's most likely going to bounce, and it did. So bounce, come back, retest, get our rise. So let's see. I don't see divergence, but I see RSI telling me it might drop from right here. Starting to slope a little bit down. See, I was making a double top formation as well. So boom, drop. Consolidate, consolidate, consolidate. Drop. So, I mean, you do get a reversal pattern right here, but it was mostly consolidation, and you would have thought it was an uptrend, but you would have put your stop loss right below, and you would have gotten taken out. So, and it hit the strong resistance point again, and that's why it dropped. Boom, drop. So, you know, I'm just showing you, like, this works on any pair, guys. Divergence on an RSI line. Combine it with ADX to give you more confirmation, you know, and study Ryan's video. I think he goes over divergence in one of his videos. He's using an RSI 5 though. It's a little bit quicker. It moves a little bit quicker. I like a little bit larger number for the RSI line, the period, because I like looking back at more candles. Because remember, the RSI line, whatever number you put in as a settings, that's how much candles it's looking back. So if you have 21 as a setting, it's looking back 21 candles. If you have 5 as a setting, it's only looking back 5 candles. So if we're on the hour chart, it's only looking back that much candles, if that makes sense. So it's up to you. You can test out both. I have, like on my real charts, I would have multiple, like I would probably have 2 RSI lines, or I'll use one on my mobile, and then I'll have one on my computer, and then I'll just be looking at both and being like, okay, something's forming. Let me wait for the reversal pattern close. Boom, get in. You know what I mean? And you can also count your levels. I'll go more into level counting on another one, but just right here on Australian before it rose, you can see 1, 2, 3, 4 levels rise. See that? These bullish candles right here could have been your levels on the hour chart. 1, 2, 3, 4, rise. Okay, that makes sense. Alright, so that's it for this video, guys. Just showing you a little bit of RSI, how I use it with my trading, and I always confirm with support and resistance, trend lines, all that good stuff, right? Okay, before I go, I see divergence real quick. Looks like a small divergence. So price made a higher high here. Let me look down at my RSI. RSI is at the overbought, 68. Slowly declining. It's consolidating right there at the overbought, even though price is making a higher high. It's consolidating on the RSI line. Made a small double top right here. Divergence, drop. Even though it spiked up, it only measures the close of the candle. It's still dropping. Boom, drop. I got in right there. I got in right there, and I got 35 pips, and I got out. Could have gotten more, but whatever. It was NFP. Let me scroll back. Remember, NFP candles, they'll probably show you a big wick, and then, you know, like this is an NFP candle, so at the beginning everyone was buying, and then it just turned inside out, and then boom, drop. So you could have gotten out the average. So you could have gotten 50 pips, 53 pips. If you wrote it all the way to the next average, 82 pips. So, you know, basically this video is just showing divergence and how it lines up with price action. So you would confirm with support and resistance, trend lines, etc. Okay, so that's pretty much it, guys. Confirm with the reversal pattern as well, and that's just giving you more confirmation to get in and not have any fear of the market. Alright, guys. So peace out.